Okay, we are back at walking and answering recovery audit questions with Fluffy today. Today's question is a good one. It's a general one that would go across all kinds of recovery audit concepts, and that question is: how are recovery audits typically billed when you use an outside recovery audit firm? Um, Great question, and the simplest answer is by far and away the most common model is a full contingency rate where the recovery audit firm takes a percentage of the dollars that are recovered after they've been recovered. Whether we're talking about contract compliance audits, retail accounts payable audits, commercial accounts payable audits, freight audits, even construction audits. If you're talking about a traditional recovery audit firm, I would say 95 to 98% of the time, the billing models I've seen, with my firm and other firms, is a full contingency rate, meaning that for every dollar that's recovered, the recovery audit firm is going to take a percentage, a few cents on that dollar to invoice as their fee. Obviously, this is beneficial for a number of reasons. The reason it happens the most is not surprising either. Organizations don't have to go out and get a budget to perform a recovery audit, right? It's not an expense budget, it's actually a revenue budget. So if, ABC Corp has never done a recovery audit, is considering doing a recovery audit, and they need to go get all the internal approval that takes place in a big organization, normally for a project, you'd have to go out and say, hey, this is going to cost $500,000. And you'd have to go get budget for it and approval and set up a PO. In the case of a recovery audit, and that's fully contingent, which is, again, 95 to 98% of them, you're going to allocate what you think recoveries are going to be, and you're going to budget for those recoveries minus the fee that you're going to pay to the firm. So obviously a nice selling point internally when you're trying to get new initiatives off the ground. Other recovery audit models aside from that full contingency rate, and again, I want to clarify one thing before I move on. On the full contingency rate, it's on dollars recovered, not dollars identified. That's important, especially when we talk about like a contract compliance audit. If you have a firm that goes out there, they audit one of your suppliers, and they identify a $200,000 error, let's say, and you agree that it's a $200,000 error, and you start having conversations with the supplier, and maybe even they agree that it's a $200,000 error. But based on the relationship and based on the fact that there's always a little bit of guilt on both sides, and a little bit of horse trading. Let's say that the settlement is, hey, we realize this occurred, but it happened over a long period of time. We're willing to come to the table and pay 60% of it back. So you only recover $120,000 of the $200,000. And the way your recovery audit firm should bill you is just on the $120,000. You didn't get the $200,000. And you might have a firm here and there who'll make an argument, well, hey, it was valid, and that's not on us, but it is. I mean, that's kind of part of the process. So the expectation should be an invoice only on the actual dollars recovered, in my strong opinion. Some other models that are not common but do occur. There are fixed price models where you do a fixed price per audit. It could be $10,000, $20,000 an audit on like a contract compliance audit. There are hybrid models where there is both an hourly and a contingent component, or a fixed and contingent component. Again, this is more common in the contract compliance world than it is in other areas, but it's still very uncommon. We have done some hourly engagements in cases specifically where there's not a high level of interest to recover dollars. Like they say that someone says, hey, we want to do a contract compliance audit. We know there's a lot of issues here, but there's no way we're going to go after the money. But we want the insights. From time to time, those will occur, and obviously we can't take a percentage of dollars recovered if the intent of the client is not to ever recover any dollars. And so those are typically done on an hourly basis, but could also be fixed price. So really edge cases though, right? When we're talking about recovery audit, almost always you're talking about a full contingency model. There are also instances in which there are tiers. So instead of just doing a flat, let's just say a 25% model, a firm will do a higher amount for the first X number of dollars. So they might say, hey, to cover our costs for the first, let's say, $250,000, we're going to charge 50% or 40% or 35%. I'm just throwing numbers out here. But then after that, we're going to have a lower contingency rate than we would have if we just had one flat contingency rate. So a little bit of it's somewhat common. I mean, that's somewhat common. I'm typically a big fan of just making sure there's transparency with the organization that's running the recovery audit, and make sure that whatever the model is, the contingency model is, it's in line with the incentives of that organization, and there's clarity around that. So a little bit longer video than normal, but I guess I missed a few days, so that might account for it. But appreciate you watching if you've gotten this far, and we'll be back on soon. Thanks. Bye.